Okay, everybody, here we are, you and me. I've been waiting for this moment all day. Seriously. I was looking forward to hearing what was going to come out of the mouth of the Federal Reserve. You know, we heard from their minutes today. We're going to cover that, and it's just laughable. We'll talk about the markets, Citigroup, Goldman Sachs, crude oil, everything. So let's do that. Let's start off with this market. So what happened today? Well, stocks finished in the red. Anything dramatic? How about no? About a 1% across the board fall for the Dow, the S&P, and the NASDAQ. Okay, what does this mean? Well, nothing. How do we know that? Look at the 10-year yield, 1.27. Okay, no panic here. Look at the dollar, just about flat. Again, after the Fed minutes. You see, what's going on here, you have to understand. Turn on CNBC, Bloomberg, Fox Business, any one of them, and they're going to tell you that, oh, the market's getting spooked because the Fed is talking about tapering. First of all, that's not true. The Federal Reserve, the things that dwell in the land of the Federal Reserve, they were kind of split down the middle, you know, with half the camp saying, oh, you know, we should taper sooner than later. The other camp saying, oh, no, things are not really so good. It's not going to happen anytime soon. And the market, despite the falling today, stocks, I mean, again, the 10-year yield reflected nothing. The dollar, nothing. Okay, maybe we're going to get a small correction. Maybe this time we'll get one. You know, 1%, 2%, 3%, 4%, that's not a correction. Corrections are 5, 10, 15%. We haven't had one of those in years. That's the truth. Has nothing to do with the Federal Reserve. Nothing at all. Period. The end. This is, again, a market who realizes what the Fed is going to do. And that means they're going to continue to buy assets. That's pretty much where we stand. I had to write a bunch of stuff down here. Actually, let me read this to you because this is a quote from the Fed minutes. Substantial improvement in the economy is not yet met. So they're telling us the economy is shit. Like we need a duh for that one, I think, actually. And again, they were split on the taper time. People, it's insane. So the takeaway from the minutes for me, and I'm sure for you, if you were listening to this, there's no plans whatsoever. And the debt market, including the dollar, a unit of debt, is agreeing with us. That's the camp I'm in. The Fed is not going to taper anytime soon because they're saying the economy is crap, basically. We haven't had a single piece of good economic news. You know, it's interesting. You turn on the freak show, CNBC, Bloomberg, Fox Business, and they're parading out creatures who are talking about, you know, the economic news isn't so bad. It really couldn't be any worse, people. You know that. So they're paying these people whatever to, you know, bullshit. It's over. The economy is contracting as a percent of GDP. As a matter of fact, it's in free fall. We haven't had a single piece of good economic news, and as far as the eye can see, you know, it's astonishing to me. It really, really is. More people today are on public assistance than ever in history. And that's supposed to be an economic boom. Sure, it's booming for the well-off and the rich, but for everybody else, not so much. And you know that. Anyway, so on the back of the, you know, roughly 1% sell-off, nothing pretty much in the stock market. This is a buying opportunity. How do we know that? 10-year yield, 1.27, dollar flat. We buy the dips, every one of them, until the 10-year yield starts to spike in an uncontrolled fashion. 1.3, 1.4, 1.5, very rapidly. That's going to put pressure on the stock market, and it's going to sell off hardcore. Until that time, we buy all the dips. We buy all of them, period, the end. Even dips in everything else, cryptos, which in aggregate had some pressure on them today, except for Dash. Dash is about 210 right now, and they're all going higher, people. Gold and silver also under a little bit of pressure today. Now, crude oil. Let's talk about crude real quick. Took a hit today, about 2%. I'm a little surprised to see crude fall to where it is, about $65 a barrel. But look, let's put that into perspective real quick. It has no business being here. No business at all. The true price for crude, under 20. Under 20. It's all propped up. When crude gets into, well, we're not really there yet. I would say probably the $62 range. We got to start going, false flag alert. We're not really there yet. Anyway, we'll see. We'll see how crude is going higher, in my view, and in the view of most, in fact, all of the Wall Street investment banks have about a $100 target on it. I'm in that camp too. I think crude is going much higher. How they get it there? Well, that'll be an interesting story. Maybe they'll devalue the dollar more. Maybe they'll sink a tanker, bomb a refinery. I don't know, some other nonsense. That's what they always do. So why would it be any different this time? And on the back of crude oil falling today, what else? Energy across the board fell. Financial stocks fell. But people, look, all you got to do is look at the 10-year yield, the dollar, and you know it's a buying opportunity. It is a buying opportunity. Let's move forward. We got some interesting news today from Goldman Sachs. This is what they're saying specifically. Goldman Sachs is warning on the economic situation here. It's not good. Duh. Really? Oh, and then Citigroup, the one that already warned us twice about the stock market and it kept hitting record highs. Well, they're kind of echoing Goldman Sachs as well. The economy is not good. Oh, really? Oh, thank you very much. People, it's insane. You really, you can't make this stuff up. You know what this, I also want to read this to you real quick, just in case you are not aware. So 7 straight months now of the S&P 500 making gains. 7 straight months. Maybe we'll get a down month. Oh, could you imagine my surprise? You see, this is not normal for a market to have 7 straight months of gains. It's just not normal. Now let's talk a little more about the Federal Reserve today. Now, we all understand, at least you should, that one of the mandates of the Federal Reserve is price stability. Price stability. Well, there's no price stability whatsoever. We have inflation spiking at its fastest pace ever, food inflation out of control, housing in a hyper bubble. I mean, really, this is all the Fed. And they're going to be, again, nothing's going to happen to them. Understand, when this whole thing comes down of their doing, okay, this is all engineered, nothing's going to happen, just like last time. And they were responsible for the last market crash and the one before that and the one before that. It's always the Fed. They create an environment of risk like they're doing now, except we've never seen anything like this before. They allow these bubbles to manifest themselves and then they deliberately bring them down. But there's been nothing like this one. So price stability mandate. I'm still waiting for one of our so-called representatives that care about us so much to pull that thing from the Federal Reserve, the chairman, Yellowstone, before a committee and say, explain to us about how inflation is contained or it's not widespread. Explain to us why you're not, sticking to your mandate of price stability, why you're running an inflation creation machine to deliberately create inflation. Unbelievable, people. They're also creating a deliberate environment of risk by suppressing rates now for, over a decade. Can't make this stuff up. It's unbelievable. What else we got here? Really, that's it. There's not much else to talk about with regard to the Federal Reserve. This is a game, okay? And the propaganda is being put out by the mainstream channels. But all you got to do is look at the market itself. And I'm not talking about the stock market because the stock market is a derivative of other things. The stock market is a derivative of the debt market, the dollar, what crude oil is doing, because that, again, energy sector, financial sector, and of course the Fed's balance sheet. You know all this. So forget about what's coming out of these creatures' mouths because you know where to look, okay? And until, like I said, that 10-year yield starts to spike, and it's pretty stable right now, every dip in the stock market should be bought, period. All right? If you have a different perspective, I would love to hear it. But I want to hear, if you have a different perspective than I do with regard to the market, back it up with something. What are you looking at? Understanding that the market is a derivative of the debt market, number one. Number one, the debt market hyperbubble is what's, creating this environment right now. And the Fed, is making sure that it continues to do what it's doing. There's no taper in sight, okay? Gauging from the 10-year yield, gauging from the dollar. So I really would love to hear, again, we all know that this market's going to come down in an epic fashion. It's going to be biblical. But that's going to be when? Exactly when we get a sell-off in the debt market. That's the only thing, period, the end, that's going to cause this market to fall in any kind of meaningful way. All right, people, look, that's it. I covered a lot of important things here. I hope you probably watch this video twice, listen to what I've spoken about here, take it in, Goldman Sachs, Citigroup, understand what's happening to you, being propagandized, you're being lied to on a massive scale. All right, this guy here loves you a lot. I will see all of you in the morning, and I'm looking forward to reading the comments. So, and I promise you I will. I want to hear from you. I'll see you tomorrow.